just also welcome in Amisha Vora, then Joint MD at Prabhudas Lilladher. Amisha, good to have you. Markets are reacting favorably to the election outcome. You did see that big breakout rally on Monday, big buying yesterday, scaled 12,000 and 40,000. Bit of a cool off, but once again, we're on the move. Was this priced in to this extent, Amisha? Because again, there have been concerns on valuations, on slowdown, on the fact that fundamentals may not be as strong right now, but markets are ignoring all of that.
I think that no doubt Nifty or Sensex will remain a bit range bound and may not break out 12,500 in a hurry, but the overall mood and sentiment would remain very good, because it gives a 5 years of stability and almost 10 years of continuity, looking at the last 5 years. So globally also and domestically, people know that be it on infrastructure side, be it defense, ports, roads or airports, a lot of work will happen, and behind that the cement, steel, etc. will also flourish. There are certain unattended agendas in terms of further consolidating public sector banks, or giving next fillip to Uday and the power sector, so that will be attended, as the intention is very clear. So, and fiscal deficit will continue to remain under check, and on the top of it, the interest rate will, because of the benign inflation, will remain soft. The only issue is currently the confidence crisis is there in the NBFC and financial field, and the liquidity is very tight, I think, and that could be a very temporary issue. So though all those who take a long-term approach, for them it's a beautiful time to look at mid-cap and small-cap, and I think that's what markets are reflecting.
All right, a beautiful time to look at mid and small caps. In fact, a whole host of sectors, Amisha, that you mentioned there. The concern, of course, remains around the financial space, but barring that, seeing good opportunities in a whole host of other sectors. Rajesh, it's part
the advice to clients now. I mean, how are you looking at this development? Which are the sectors that will come back in focus? Because there was that massive infra outlay that the BJP manifesto spoke about, 100 lakh crores over the next few years, a quarter of that reserved for the rural areas as well. Is that one place to watch?
I would think so, yes. And see, infra can be played in two ways. Either you directly play infra, but having known the kind of working capital cycle the whole of infra project has and the kind of risk which are associated. So playing infra directly to infra stocks, or through some of the suppliers and ancillary beneficiaries, either ways could be good to play the massive infrastructure build which will continue to happen.
Any names, Amisha, on your list? You know, we're seeing a lot of these stocks jump to days high, and that's really been the move. Cement stocks are on the move. That's a sector you mentioned. Names like India Cement have been doing well. Heidelberg Cement, in fact, at record highs as we speak. What would you be buying as far as the infra theme goes?
So yes, absolutely. So either one can directly, as I said, buy within the large cap, the Larsen, and within the medium cap, say stocks like NCC. But the better would be some of these stocks like cement, where Heidelberg, Ramco, then I think Star Cement, then JK Lakshmi in the mid size, all, and will be very good. In large cap, I think within the cement, Shree is a very good play. But as we move forward, we would have a host of stocks which we can play through, which is the pipe segment also is one of the segment which will do very well. We like Jindal Saw over there. Then there is this segment of what do you call it, the engineering play behind the infra. Even those plays could be very good, because like Action Construction, they are the largest supplier, 65% market share of cranes and this thing, so they can be beneficial. So there are ways in which one can play this theme. I generally prefer to play where the working capital cycle is not very high, and where the project implementation risks are low, and you are a supplier to this infrastructure boom. So I would rather play it through that theme.
Understood. Just a couple of more stocks.
Playing the financial theme, if at all, you flag that off as one of the key areas of concern, perhaps something the government will have to take into consideration in the early days as far as the administration goes. What would you be buying? We're seeing PSU banks, running away in the kind of rally that we've had ever since the exit polls. Is this where you'd be putting your money, or are you sticking with the private banks? ICICI Bank, for example, it's at record highs once again and the top Nifty gainer at the moment.
So our most preferred bet continues to be the corporate facing private banks, but within the PSU banks we do prefer SBI and Bank of Baroda, and it's not a PSU bank but otherwise Federal Bank. This is how our choice of stocks within the banking is there. The worry part which I was mentioning was more to do with the credit markets, the tightness in the credit market and its impact on the NBFC segment, which is where one needs to just find a solution that their tightness does not result into any major failure and its resultant impact on whether mutual funds or retail investors and the whole mood dampening doesn't happen, is what I was referring to. And I think this other part which was not doing well, both because of the capital constraint, which is a PSU bank being under PCA, and the corporate facing private banks, I think both will have very good time over next 1 to 5 years phase. I think they will do very, very well.
Point taken, Amisha. Always a pleasure to speak with you. I think you have to leave a little early to this. We'll let you go on that note. But thanks so much for joining in this afternoon and running us through your reading of the markets. Of course, a few stocks